Okay, so we earn over 1 million per year in dividends here at this channel using Yieldmax and Cornerstone and other dividend paying funds. But what about JEPI and JEPQ compared to ULTY and YMAX? ULTY and YMAX have been taking the world by storm, but we still have JEPI and JEPQ. And at these market highs, it begs the question: should we be getting more conservative with JEPI and JEPQ? Should we be living out of JEPI and JEPQ to begin with? I'm going to compare the growth of JEPI and JEPQ versus YMAX and ULTY. And also, I'm going to share with you how I actually live out of these dividends out of my account when it comes to taxes and showing qualifying income and things like that. We're up 3.5% for the year, so we earn over $1 million per year in dividends. You saw on Friday we're up 14,000 or 0.53, which, as you can see above, beats the Dow. Also, when you factor back in margin, we beat all of the indexes. We beat the Dow and the S&P. That's why we're up 3.5% to start the year, whereas the Nasdaq's only up 0.5. The S&P is up 1.76. The Russell is beating us by 2 basis points here. And so I've been going over that with my members on how we're going to catch up to the Russell, but we're going to be doing it safely. All right. And so today, though, in today's public video, for my members and for everyone, I'm going to share with you again where I should be investing my money. I don't give advice. I only share what works with me. Last year, we got a 25% gain. The market was up 18%. We've been at YouTube for 3 years, okay, leading this fire movement. We're the tip of the spear here. And when I started doing YouTube, no one else was doing any margin investing and how to actually live out of your brokerage account. You learn how to get my outperformance and how I live free out of my brokerage account at my website, unconventionalwealthideas.com, or email me for my e-guides at ikatod48@gmail.com. So 3.5%, we're still beating the market, okay? Last week we were beating the market to start the year in 2026. And this is, I say this intro every time because this is actually tracking my performance. This is not to brag. This is to show what works. And everyone some people have said that my channel is very similar. All the videos are very similar, but winning is similar, and you have to keep the same approach. As Mally, one of my beloved members, would say, repetition is the mother of success. I think that's what Mally says. I hope to see you here today, Mally. So JEPI and JEPQ, ULTY and YMAX, who wins? Who makes us more money on a daily basis? Who's going to give us that qualifying income to live out of our brokerage account with? Who eventually just makes the most money? And I remember JEPI and JEPQ used to be crowd favorites, cult-like favorites. Now it's, ULTY and the YMAXs of the world. So first we have the fact that my dividends, a lot of these come from ULTY, okay? ULTY is a small part of my portfolio, to tell you the truth. It's not really, it's 20% of my portfolio, but ULTY, gives me a lot of these dividends, which qualify to the banks for loans. Members know I'm trying to get a new house, so I need these dividends to help me qualify for a house. And there's a way to do it, okay, because these are return of capital, so you have to do it a little bit differently. I cannot wait to share that advice that I've been getting from my loan officer with my members. All right, I have really interesting stuff coming up here on how I'm using my dividends and my margin to get this outperformance and to get this house now. So the first thing we need to look at when it comes to JEPI and JEPQ and ULTY and YMAX, we need to look at the maintenance, obviously, because the maintenance is everything when you're living the fire lifestyle, okay? My members know I always start off with maintenance, but YMAX's maintenance is 50%, and JEPI and JEPQ's maintenance is 30%. So YMAX right here, 50% maintenance. And if we go to JEPQ, you'll see that the maintenance is 30%. All right, so this is huge. If I want to buy this house, and also we're at the market highs, okay? Yes, we're up 3.5% for the year, but if I'm trying to save money for this house and raise my available withdrawal, as you see by this number here, I need low maintenance. I also want to do this while the market's at the highs to protect myself because the market's at the highs, okay? So I use low maintenance to keep my available withdrawal high. If you need help understanding maintenance, that's in my Volume 3 e-guide on how to use margin to live free out of your brokerage account. All right, so maintenance with JEPQ is obviously a lot lower, all right? And we love that, okay, compared to YMAX, which has 50% maintenance. However, who gives me more qualifying income? Well, obviously YMAX gives me more qualifying income if YMAX has around a 70% dividend. If we go to the YMAX website here, we see Dividend 45%, okay? ULTY is around 70%. I remember when YMAX had much higher dividends. Anyway, so 45% versus JEPQ, which is about 10 to 15%, as you can see here at E-Trade. All right, call it between 10 and 20%, just, for rounding purposes. So we have a clear difference in dividends here. We have 10 to 20% in JP Morgan's JEPQ, and we have 50% in YMAX, and YMAX has 50% maintenance, and JEPQ has 30% maintenance. So far, it would seem that JEPQ would be the better bet, but because of the lower maintenance, but because of the lower yield, and I can't qualify for that for loans, well, then I'm going to be leaning towards YMAX. Also, JEPQ doesn't pay down my debt fast enough, okay? I grow out of my account with three main techniques, okay? One, I sell these options. You can see here, they don't show the day's gains on the weekends, but you can see TNA was just an outlier here, as you can see here, but you can see that we have gains in these puts because it's really hard to lose in the puts that I sell. I get extra growth from selling options, which you can just see here in the, on this screen while I have it up. ULTY you see is down 700, but that's because that was before the split. You see my other ULTY position is actually up 100. So you can actually sell options on many of these different funds. I mean, my BidX, I'm up 1,600 in. I just let time go by and I sell my options. I get my premiums. It's very similar to what Yieldmax does. They sell options on these high volatility names. They get the premiums. They pay you in the form of a distribution or a dividend. I get the premiums. I sell my own options, and I get them in the form of premiums, and they lower my margin. So I've lowered my margin by about 50 to 100,000. I do that every given year with selling options, which is safer than buying stocks in the outright market because they give you the premiums, which lower your cost basis. If you need help understanding maintenance and selling options, which when you sell options, that does lower your maintenance, by the way. But if you need help understanding options and how I sell them, see volume 6. So I'm growing with three main ways. It's not like I'm just growing with JEPQ and ULTY and YMAX, okay? I don't just look at the stock price going up on a chart. For example, I sell options to get my growth. I lower my margin through dividends and options to get my growth. So when I lower my margin right here, it grows my account by the equivalent amount. So if I earn $1 million in dividends, that makes my margin fall by $1 million per year. And then my debt falls by $1 million and my account grows by $1 million, okay, in a sideways market, assuming a sideways to up market. So dividends here, they pay down my margin, which acts as a separate account, which gives me my growth, okay? On top of the index's growth, I get my growth from margin, okay? Margin acts as a second account. And I sell my options to lower my margin. And again, I use my dividends to lower my margin. Dividends on margin, which is how I get extra growth and extra qualifying income. So this is how I'm living out of my brokerage account while outperforming. I'm getting growth from margin and from selling options. Also, I'm getting growth, of course, through Cornerstone and vehicles like a JEPQ grow. Okay, so if you look at a chart of JEPQ, you'll see here that it grows. It went upward, left to right on its chart. On a 5-year chart, it moves upward, left to right. Now, if you were to go look at Cornerstone and see how it moves upward, left to right, you would see a similar pattern on a 1-year chart. You see how it moved upward, left to right. Now, Cornerstone has a 20% dividend. JEPQ has around a 15% dividend. JEPI has around a 8 to 10% dividend. Cornerstone is the same thing. It's the indexes like JEPI and JEPQ, but it actually gives you a 20% dividend, the higher dividend. And look, it gives you this premium at NAV, which if we refresh it, we're just at 23, but now we're at 21%. Either way, I'll take that. You get 21% gains every month on top of the 21% dividend that it sets at its NAV per year. So with Cornerstone, you get the drips of the NAV, which JEPI and JEPQ do not give you. YMAX and ULTY don't drip at the NAV. So I get my growth from Cornerstone. I told you I get it in 3 different ways. I sell the options, which aren't as big of a part of my portfolio, but they're the most conservative way to do it. I use dividends on margin because my margin acts as a second account. But then I also use Cornerstone, of course, as my main growth vehicle because not only is it indexed with the highest dividend in the land, and it's 4-star, as you can see here on Morningstar, 4-star for Cornerstone, and it moves upper left to right here on Morningstar. But it gives you these drips at the NAV, okay? So you get extra growth every month with these drips at the NAV, which we're, again, at 23% last week. A couple of years ago, we were at 30. to 40% plus premiums at the NAV. So you get that every month for extra growth when Cornerstone's dripping at the NAV. Now Robinhood has Cornerstone, which is great, but I don't think they drip at the NAV. So, but Robinhood gives you low maintenance, which is a great way to get ahead. Many of my members use both. So with Cornerstone, you get the drip at the NAV and you grow that way. But also you play Cornerstone between the rights offerings. That's how you really grow. They have rights offerings, closed-end funds like Cornerstone. JEPI and JEPQ do not have that opportunity. So you get growth from Cornerstone with the dividend, with the drip at NAV. You get days gains like you do with JEPQ and JEPI, but you also get the rights offering opportunity. This is where the rights offering began, essentially, when the N2 began, which we're all here in Discord. We sold there, as I say in every video. I must say it because I'm very proud of it. Not all of my members were able to catch it right at that point. So, that's why I started the membership videos, so that no one gets lost in the membership videos. But also, not everyone wants... I started the membership videos because some people get lost at Discord, okay? We have over 3,000 members here in Discord. And not a lot of members use Discord in some cases. I mean, many members like Discord. Some members are like me, and they're more old-fashioned. So they didn't really get the rights offering alert right away, even though it was here. We give it to you here at Cornerstone. And then we have my membership videos where I was trading it live after hours, okay? And all my members were there with me. So we give you the rights offering announcement here at Discord, which is so great. We also keep our Cornerstone discussion channel active here and our RO discussion channel. It's very active. And then we have all these other channels here that you can read at your leisure, okay? We used to be very active in those, but we have all the great information preserved in those. If you keep talking on all these different channels, then you just lose all that precious information. So now it's there for you to see, and you can still talk actively in Cornerstone discussion channels. And so that's very helpful, okay? Using this resource, Discord, which is free when you buy my e-guides. All right, when you buy the gold or platinum bundle, you get Discord free for life. All right, so again, you need to grow with JEPI and JEPQ, but it's hard to actually grow and really level up your account without the rights offering opportunity that Cornerstone gives you, which we talk all about in volume 4 of my e-guides. So we get our growth. I just laid out 3 different little methods for you, options, dividends on margin, and Cornerstone. We get the drip at NAV, and you get the rights offering opportunity. That's how I grow and offset not having as much JEPI and JEPQ, because JEPI and JEPQ did grow. If you go look at their charts, you see that on a Morningstar chart right here, if we go look at the growth for JEPI and JEPQ, starting with JEPI first, which is a 3-star fund. Cornerstone's a 4-star fund. But JEPI, it grew, okay? Look, 10,000 invested. It made you about 19,000 since 2020, which is a double, okay? So that's very powerful stuff here, okay? The investment, the ... it starts right here from 10,000 to 19,000. So that's a double in 5 years. Once again, really hard to beat that. And with JEPQ, you had a similar deal here where since 2022, mid-2021, we went from 10,000 to 18,000, okay? Spectacular, okay? That's an 80% run in the span of 4 to 5 years. So JEPI and JEPQ can be powerful, but my issue with them is they don't have enough dividends to pay down my margin fast, and they grow with capital gains competitively with Cornerstone, but I can beat them with Cornerstone because of the rights offering opportunity, because of the drip at NAV opportunity. You compound and snowball your dividends with the drip at the NAV because you get those premiums every month, the extra gains on top of the dividend, but then you reinvest them for more growth. But the problem with JEPI and JEPQ, as I was alluding to with buying my house, and members, I can't wait to share more about this with you in the next members' videos, because as I'm learning this information, I'm going to be sharing it with you as I learn new little nuggets, okay, from this loan officer that I'm working with. And ULTY, it's growing, and so is YMAX on a total returns basis, but with their charts on a regular, on just E-Trade by themselves, you see their charts, they're falling, okay? But go look at the total returns of YMAX, okay? And I say this because if we go to YMAX, you see the total return here was 33% since inception, okay? 33%. So even though it's falling on the chart, it's actually up 33%. Okay, ULTY has a similar situation where it's falling on the chart, but it moves upward, left, or right on its chart. So if I'm still getting upward, left, or right movement on the chart, I'm segueing here into this part about my house and preserving my equity at these market highs. Well, if I can actually get total returns here, and let's just find ULTY for you. ULTY's total return, it's still, I think it updates monthly, and it's down 1% since inception, even though you look on the chart and it looks terrible on the chart. Look at ULTY here on the Morningstar chart. You see that it also moves upward, left, or right. Okay, upward, left, or right. Even though it's pulled back, it's making higher highs and higher lows. So I say all this to say, look, the charts go down with ULTY and YMAX, but those are cosmetic, as we know, all cosmetic, similar with Cornerstone. You have to play Cornerstone properly around the rights offerings. And with YMAX and ULTY, you have to drip these properly around the proper market dips. And if we're getting upward, left, or right movement, that means the dividends are real, in my opinion. If the movement was also down on its chart on Morningstar, well, then I would think that the dividends were phony. But you look at the total returns on the Yieldmax website, and Yieldmax is up 33%. So this is very powerful. Okay, 33% since inception. It was created, look, as of 12/31/20. No, this is the date. I'm not. I think it was created in 1/16/2024, so 2 years ago, and it's already up 33%. So I think that beats JEPI and JEPQ if you look at it on that from that time frame. Okay, but I could be wrong. Y'all go ahead and drill down into the numbers for me. Okay, but this looks like if you were to give it a 5-year time span, that this could outpace JEPI and JEPQ, YMAX could. ULTY is different. ULTY is tied to Bitcoin and higher beta names, which if we have rates falling and things like that and Bitcoin rallying, well, then you might see a big year in ULTY. I mean, last year it was up 30% before it was down 1%. All right, so again, bear with me. I say all this to say that if we're getting real returns from YMAX and ULTY, real dividends, okay, and we're actually growing, 33% for YMAX, 30% at one point last year for ULTY. That can not only outpace JEPI and JEPQ growth-wise if you extrapolate that out 5 years, but again, y'all correct me and do the math for me, chat. You can also comment anytime, you know, when you are watching this video, even if you watch it a day or two later, let me know what you think. But we get to outperform JEPI and JEPQ with YMAX and ULTY and get higher dividends, which pay down my margin faster than JEPI and JEPQ. They give me more qualifying income. And the best part is I don't have to sell ULTY and YMAX to pay myself, okay? With JEPI and JEPQ, I would actually have to go in there and sell my shares to, you know, pay myself for the month to pay my bills, okay? I don't want to incur taxes. I don't want to lose my ability to keep compounding my account. With ULTY and YMAX, they give you the dividends and they continue to pump out the same dividends around the same yield. So if you're getting these dividends with ULTY and YMAX, there's a way to not only get that and pay down your margin and pay your bills, but you can use all that as qualifying income without having to sell anything. Okay, you can show those return of capital dividends, which I've showed you in past videos. You know, they're about 100,000 a month here. You can show those and actually qualify for more income without having to sell anything, okay, which is important. The key with ULTY and YMAX is, I think, dripping selectively on the dips, you know, so you can replenish, replenish the coffers, so to speak, you know, because ULTY, if we go sideways for a while, like it did here on its chart, if you look at a chart when it was up 30% for the year, right here, it was going sideways, it would fall. And then, it would fall from an ex-dividend date. We would get the dividends back, and then the stocks kept moving within ULTY. They kept moving higher, which would drop by the ex-dividend date, and that made a sideways pattern here, and that made the dividends stay the same. And so when you have a bull market in small caps and Bitcoin and risk-on names, that helps ULTY a lot. And you can just keep getting these dividends without having to sell any shares of ULTY. And they're tax-free because they're 100% tax-free. They're return of capital. Return of capital hurts you when you're trying to qualify for income. I just want to let y'all know that. It's hard to use return of capital to qualify for loans unless you do them properly, which, again, I can't wait to share with members in the coming videos. Okay, 100% ROC for ULTY, okay? So that's really important. I don't have to pay taxes. If I sell, then I have to pay taxes on that ROC. So why would I want to do that? I can show all these losses instead, not have to pay my taxes, but I can still qualify with these dividends, okay? And there's a way to do it. All right, if you need more help doing what I'm doing, living free out of my brokerage account, outperforming the markets in the process, email me from my e-guides at akintodd48@gmail.com or head to my website, unconventionalwealthideas.com. You can learn all about my e-guides and my community there, okay? Here's my website. You just check this out at any time. You can see my testimonials. I have so many more that I need to enter in. I just take them off comments from YouTube. And, you can learn all about me and, what we've done with Yieldmax. I don't get paid by anyone, okay? You can learn about what we're discussing in Bloomberg. I remember Bloomberg was trying to call out Yieldmax when they first started out. Were these yields achievable and sustainable? And they are, okay? You look at those total returns on their website, Yieldmax, okay? We saw that, 33% for YMAX, all right? You have to get these dividends. Yes, you can get over $1 million per year in dividends, but you have to do it right. You have to do it safely, and you have to do it, in my opinion, while getting this kind of outperformance, these kind of days gains without trying, okay? Other people go try to trade the market and do all this stuff. 90% of traders lose. This strategy is passive, and when I'm active, I just like to take advantage and outperform if I can. I love doing this stuff. Most members buy my e-guides, and then, because they get Discord for life and they get my phone number for life, so they can call me if they ever have questions. All my members know that I'm here for them. And then they watch my membership videos and they follow my live trades, when the market is live. That's who all these members are here with these badges by their name. Hey, Justin, Sniper, Sam, Mark, Jared. Great to see y'all. What's up, Breadman, Hulk Man, Silver Liner? Yeah, glad y'all can make it. Hey, DK, Rico, Major Sam. Question, do you remember at what account balance were you able to get E-Trade to lower your margin rate? I've had some people lower it, Sam, with as low as $20,000 in their accounts, okay? Also, I send my script to my members. I think I've sent you a script, right, Major? If I haven't, please let me know. I'm getting to all members. At first, I was doing the 50 a month and the 35s, but now I'm getting to 10s. So if you watch this video and you've bought my e-guides, my gold or platinum bundle, please, I'll announce to platinum members soon, and I'll give them all my script as well to negotiate rates. But I have to get to all my members first because they bought my e-guides, and then they follow me after, of course, through YouTube. I would make this all one service, by the way, just for what it's worth. But YouTube controls everything on their own. I have to, have a separate service through YouTube. So e-guides help you understand everything, and then the membership videos help you follow along with what I'm doing. And I'll send you that script, Major. And I think I have, Major. So let me know if you haven't had success with that. Many members have, of course, but we can always, you can always still get that negotiated down. You just have to stay on them and call me if you need help, continuing that negotiation process, Major. Hey, Justin, once again. Hey, Mom. Patty A, that's my mom. Love you, Mom. I'll see you tomorrow. Hey, M. Crawl. Chris, what's up, Chris? Man, I start to get overwhelmed, by the love here. I love my family here, my fire family. And we're outperforming the market, so it's exciting. These are great times. We've been outperforming every year. But now getting this house, going to the next step for a bigger house, I can't wait to share that information. This is all shared in real time. All of my, updates in the market, my life, my lifestyle moves with margin. We're doing it here, and I don't know of any other channel that is really living out of their brokerage like this. Of course, Sam, wait, Sam, Todd, wondering how to show your brokerage number underperformance to the left of the Dow. Yeah, you just go to right here. You just click performance right here under portfolios and just hit performance right there. Okay. And, it's always fun looking at that number because most people, 90% of fund managers cannot beat the indexes. We're doing it passively without trying. Silver, QQI is another amazing ETF. Yep. I love QQI. We'll do that in another video. I own JEPQ, I own QQI, but in very small amounts for now. We'll go over how to play those, once I'm trying to get more aggressive in the markets. We'll definitely be covering those more, Silverliner. Good afternoon, Ro. Chris, I think JEPI and JEPQ are not as tax efficient. Exactly. They're generating income through ELNs and taxes or ordinary income. Right, C. Martin. Taxes or ordinary income, you don't get those benefits, and then you have to sell Because you have to sell from the shares to actually pay for anything. I mean, I don't think they pump out enough in dividends to pay for your bills unless you have a ton of money in there. And if you did, I think you're losing to opportunity costs if you have too much money in those, because I think you can actually outperform the markets with other tools in the account, not just have it all in one, a JEPQ to make that work for you. Yeah, you have to be diversified, and if you're diversified, then JEPQ doesn't pay you enough, and it's not tax advantage. So I agree. C. Martin, thanks as always, Chris. Great comment. Amir, happy Sunday. Mark, exactly. 10K a year dividend income from JEPI would result in $2,200 in taxes. I'd rather ROC and not worry about taxes until I sell, which I never do. Exactly. Who would ever want to sell, and have to pay taxes and lose the qualifying income and lose your ability to pay bills? It's just, I love return of capital, as long as the NAV is growing, which these NAVs are growing. When the underlyings are growing, that is. They have to, you can't say the NAV's growing in a bear market for the S&P, but if the S&P is growing, well, then the dividends are good return of capital. And we know the S&P will grow over time, so it's generally always good. DK, ROC equals return of capital. Exactly. SL, thank you, Todd, for always sharing your insights here. Always appreciate you. You too, Silver Liner. I hope your vacation, I think it was in Nevada, is going well. Justin, E-Trade needs to hurry up and fix the estimated income calcs. Yeah, I know. Our numbers should be lower after the year-end dividend payments come in. Those end-of-the-year special dividends. But hopefully we're still around $1 million, as always. And if not, then we'll get that back up to $1 million safely, okay? I'm always chasing that number. And there's a reason why I go for $1 million. It's not just for show. There's a reason, and I've discussed it in our teams, Justin, but I'd love to make a public video on it, going more in depth. Hey Bob, hey RH, great to see y'all. I paid for a call. Howard Pratt, I paid for a call. How do I give you my number to call me? Just email Howard, email me, Howard, email me, and you'll have my number, okay? Someone just booked a consultation on my website the other day, and I sent them back. We haven't spoken since, but you have my email. Check your emails, okay? All right, so, and I look forward to that, Howard, okay? I really do. Just like, speaking with all my members, I always enjoy it, okay? So, yeah, I hope y'all enjoyed this video. I gave you the merits, I think, for JEPI and JEPQ versus ULTY and YMAX. Weigh these carefully on your own. All right, let me know what you think in the comment section, all right? And I'll see you on the next video, okay? SL, actually, it was just a 3 or 4 day business trip looking at real estate in Nevada and Arizona. Sam, yes, 4.6. Oh, great job, Sam. Way to go, Sam. 4.6. That is excellent, okay? I mean, look, the S&P right here is at 1.76. So you're killing it, Sam. I'm proud of you. I know you just started out. I'm proud of you. Hey, Tunza, I hope I'm saying your name right. Tunza, I think, yeah, you booked a call, didn't you, Tunza? Or was it the E-Guys that you bought recently? But nonetheless, welcome, Tunza, all right? And I'm happy to have you, Tunza, okay? And I hope I'm saying your name right. Call me, or if you have any questions on your portfolio too, okay? Welcome to the family, Tunza. Hope I'm saying your name right. All right, I love you all so much, okay? I'll see you on the next video, okay? Take care.